Hey, good morning, good afternoon, good evening. This is Mayor Valensky with the Driving Markets. Let's kick off straight away. So the big news is that Russia has not signed the Black Sea deal or the Black Sea corridor deal for export of soft grains from Ukraine. Let's just go over that again. Back in February 2022, Ukraine is the fifth largest producer of soft grains in the world. Wheat, barley, soya, corn, all types of soft grains, okay? They're known for their wheat because they've got literally miles and miles and miles of fields of just wheat, okay? Now, what's happened as follows is that during the war, obviously those exports dropped, and that caused a big jump in soft commodities globally and was a factor in pushing up inflation. So inflation did rise on the back of the war at an initial stage. Then over the last year and a half, once Russia came to an agreement via Turkey to allow a corridor of exports via soft grain exports via the Black Sea, then what happened was the soft grain or the soft commodities came down in price to lower that when they were to lower level before the war. Okay, so I just want to make sure I've got that clear because it's quite a difficult topic. Right. Moving on now, that deal has come to an expiry date, and Russia has not signed a renewal of the Black Sea soft grain export corridor from via Turkey, via the Black Sea and Ukraine. Now that's caused wheat to jump up 3.5%. I'm assuming that Russia will come to an agreement. However, if Russia decides not to come to an agreement or use leverage on the West regarding soft grains or petrol or gas, then you will see a creep up or potentially shoot up of inflation. Make sure my camera's, microphone's done. Okay, so you will see a shoot up in inflation. At the moment, it's not a concern, but it's something you've got to keep an eye on. If Russia decides to turn the tap or close the tap regarding exports of oil, gas, and soft grains, that is going to have an immediate impact on headline inflation and core inflation. And that will be a major concern. The problem is that the Western economies, even if there was inflation, the Western economies cannot afford to continue with the present interest rate hikes. Excuse me. So what you've got at the moment is you've got high inflation, you've got high interest rates, you've got potentially higher inflation. The economies cannot absorb any further rate hikes, whether in the UK, whether in the US, maybe in Europe a little bit more, but that's more or less it. Talking about rate hikes, we're moving off, digressing slightly. They've got inflation out on Wednesday in the UK, expecting to come in at about 8%. However, if it comes in higher than 8%, there'll be more pressure on the MPC to raise rates. If it comes in lower than 8%, the UK will still raise rates irrespective what inflation is coming in at. However, they may slow down that rate rise. The UK is under pressure. The housing market there is beginning to crack, residential and commercial. Prices are falling. There's people who are asking to put the properties on the market, and the asking price being knocked down by 10 to 15%. So it is turning into a buyer's market because rates are so high. Developed Western world economies cannot absorb any more rate rises, and they know that. Whether it's Canada, Australia, US, Europe, or UK, rate rises should have peaked at this particular stage. Unlikely to peak because they further local central banks, whether in Australia, Canada, Europe, or UK, are going to be pushing up rates. However, the economies cannot absorb any further rate rises. Moving on to where we are with equity markets. So equity markets are marching forward. They were up yesterday, and they will continue marching forward on the back of good quality earnings. Good earnings. We're in earnings seasons. This week you've got Bank of America and you've got Tesla. Anyone who's a Tesla fan will have a keen eye on Tesla. I can see Tesla coming out with terrific results and expect it to move up further unless there is any sort of major geopolitical fallout or those numbers are below what market expects. But based on the enthusiasm around Tesla, it looks like those numbers are going to be positive, and you can see Tesla rising over the next coming few weeks. Okay. Now, regarding end of the summer, what's likely to happen is you're going to see a test of the resilience of the market. and you could end up having a correction. When I talk about correction, I talk about 5 to 10%. I feel hand on heart that the trend is upwards. Technical analysis shows that you're going to have a rise all the way through to the end of 2023, but come 2024, you could end up with a significant drop. Looking at foreign exchange markets, you've got dollar pound cable is on. I was expected to move up further to 132, 132 and a half. Euro dollar moving up to the 113, 114 level based on a weaker dollar. Gold, I'm not too sure about gold. It's hovering around the 1960. Looks like it wants to move higher towards the 2000, but it's very, very slow. Not really a lot happening there. So anyone who's a precious metal trader or gold trader, take into account that we're probably going to go through a period of where it's just treading water and not really happening, not really moving forward. Oil, interesting one. All depends if we go into recession. As far as oil is concerned, OPEC will cut production and continue cutting production to ensure that oil stays up there at $80, $85 a barrel, which is the level that they want it to be at. Bitcoin's interesting, come all the way down to back to 30,000 level. I was calling it higher last week, and it was 31,800. I expect it to go and test up the 35,000 level. There are some bears out there who feel it's going to move lower. I personally think we're going to see a move higher as far as Bitcoin is concerned. Share, subscribe, comment, feedback, all of those. That's what we need to get this channel going. This is Mayor Valensky with Driving Markets. Have a good day.